Okay, let's go ahead and go through the solution to the Module 4 assignment, Consolidation of a wholly owned subsidiary acquired at other than book value. So we have Big bought 100% of Little's voting stock on January 1st, 2020 for some amount of money. They had a book value that was given. And again, first order of business, let's go ahead and get this. Again, these are all random numbers. Let's go ahead and get these things copied and pasted as values. Okay. Little had some misvalued and unreported assets and or liabilities. They have inventory, FIFO basis, undervalued by 9. Property, plant, equipment, 4-year remaining useful life, undervalued by 23. In-process R&D, 5-year remaining life, valued at $8. Bonds payable, 4-year remaining life, undervalued by 9. Any remaining differential was attributed to goodwill. At the end of 20 and 21, the impairment tests were prepared. It was determined that the end of 2020 correct goodwill should have been 177. End of 2021, it fell even further to 152. And trial balances are given below. Okay, first order of business, let's go ahead and do our cost versus book value analysis. So I'm going to make this a little bit bigger so we can all see it. So we start with the cost. And again, much easiest to do this with a mouse. So between my mouse and my index finger plus that, subtract out the book value plus that. I need to tell Excel that that's a formula for a differential of that minus that. Okay, so we paid $228 more than book value. The question is why? And again, we've got four specific misvalued items. Whatever is not explained away by those 4 specific items must be goodwill, so just one by one. Inventory is undervalued, so we're going to go ahead and subtract out the undervalued inventory. And that was $9. Again, just using my mouse. Make this a little bit wider again. We also had some undervalued property, plant, equipment, so we'll subtract that as well. Undervalued property, plant, equipment, $23. We've got some in-process R&D. And again, that's not reported at all on the trial balance, so we need to go, so that's essentially an unreported, which means it's undervalued, an undervalued asset. So we'll go plus that. And then finally, we have some bonds payable that were undervalued. And again, if we subtract an undervalued asset, that means we're going to add an undervalued liability. And that was 9. Okay, so we're going to start with our differential of 228, minus that, minus that, minus that, plus that. So plus, minus that, minus that, minus that, minus that, gives us goodwill of 179. I got carried away. That should have been a plus F20. There we go. Goodwill 197, and that's also the amount that's shown over here. That's why I knew it was wrong. Well, I should have added that. Okay, so let's go ahead and get our amortization schedule while we're at it. Now the inventory is going to be all written off all in 1 year. So that's going to be amortized $9. The property, plant, equipment, that's $23. That has a remaining life of 4 years. So $23 spread over 4 years, $575. Likewise, the in-process R&D, $8. That's going to be spread over the useful life of the R&D of 5 years. So $8 over 5 years is $1.60 per year. And the bonds, $9 amortized over 4 years. So 2 1/4. Okay, let's go ahead and do our S entry and do the consolidation at date of acquisition. So again, consolidation of date of acquisition, we're going to debit common stock. And again, I'm just going to use my mouse and my index finger to hit the plus key. Beginning of year common stock, 53. Beginning of year retained earnings, 270. And now I've got my differential assets. Inventory was undervalued, so I'm going to go ahead and add to my inventory, $9. Property, plant, equipment net was undervalued by 23, so I'm going to add my 23. In process R&D needs to be valued at 8. Now again, these three were subtracted. This one's going to be added, so it's going to be treated in the opposite fashion. Now again, these are undervalued bonds. To increase the reported value of the bonds, we're going to go ahead and use a premium on bonds. I'm going to kind of messy with these wide columns here. Of 9. Ooh, and I left out my goodwill, so let me scooch that down a line. Goodwill plus 197. And this, if you add all this stuff up, that gives us the total value of 551, and that is our beginning of year investment in little. So I'm just going to go ahead and just confirm that. And sort of a check figure built into this. That plus that plus that plus that plus that plus that plus that minus that is 551. Okay, now we need to go ahead and post this to the worksheet. And again, as I've said repeatedly, this is the hard part. After this is simply a mechanical process of transferring debits to the debit column and credits to the credit column. So again, using my finger and my mouse, I'm going to post that common stock, so plus that, retained earnings plus that, inventory plus that, property, plant, equipment net plus that, in process R&D, I've got that account just waiting for me, plus that, goodwill plus that. Okay, on the credit side, I need a $9 premium on bonds. That account is already there just waiting for me, so plus that. And then finally the investment in little plus that. Okay, so I've posted debits to the debit column, credits to the credit column. Now it's a matter of adding across each row. For my assets, big plus little plus debit minus credit. And I can just go ahead and copy that down. The only thing you have to be careful of with copying these things down is if you have a separate accumulated depreciation account, then for that, a debit is not positive, a debit is negative for accumulated depreciation. But for all of your assets, basically all of these are going to be this value plus this value plus this value minus that value. On the credit side of the balance sheet, we're going to have big plus little minus debit plus credit. And again, I'm just going to go ahead and copy that down to fill that in. And just to sort of confirm things are the way they're supposed to be, I'll make sure my balance sheet balances, simply adding up all of my assets, subtracting all of my liabilities and equity, and that goes to 0, which makes me happy. Okay, let's go ahead and go on to the end of 2020. We have 2 things we need to do, or 3 things. We need to record our equity method entries, we need to record our elimination entries, and we need to post those things to the worksheet and complete the worksheet. So first, let's go ahead and do our equity method entries. And just sort of to, dot all of our I's and cross all of our T's, let's go ahead and, first record the purchase of the investment. That was for 551. That number, got that number right there anyway. And I wrote a check for 551. Okay, income, dividends, amortization. Looking at the 2020, I think I'm going to put that in bold italics. looking at the 2020 worksheet, Little had income of $48. We are the sole shareholder, so we report all $48 of that. So debit to investment in Little, credit to investment income. And for what it's worth, when I do these, I usually, for the debit, which you always do debits first, for the debit I refer back to this appropriate cell over here, and then for the credit side I simply say whatever's in here, I'm going to put that there also. Okay, next we have our dividends. We're the sole shareholder. Little declared dividends of $28. So we received all of that, and that reduces our investment in Little. Amortization. Again, we have 4 differential items with finite lives. Again, apologize for scrolling up and down like this. We have inventory that's going to be all written off right away. Property, plant, equipment is going to be written off at $575 per year. In-process R&D at $1.60 per year. Bonds written off at $2.25 per year. So we're going to have to record those 4 amortizations. This is a 100% owned subsidiary, so we're going to record 100% of those various values. So first for the inventory. We're going to go ahead and assume that that inventory has been sold. That's going to reduce our investment income and reduces our investment in Little. Next, we're going to write off that the undervalued property, plant, equipment differential. Again, that's going to reduce our investment income. You could talk your way through this, and again, we'd say, look, Little company is underreporting their property, plant, equipment, therefore they're underreporting their depreciation, therefore they're overreporting their income, which means we overreported our income. To correct that, we need to reduce our investment income by $575. So debit to investment income again. And a credit to the investment in Little. Same thing for the in-process R&D. We've determined that that is going to be written off at the rate of $1.60 per year. So plus that value. Okay, and then finally, the undervalued bonds payable. If these undervalued assets, which we subtracted, end up reducing our investment income, then it seems reasonable that an undervalued liability, which we added, is going to increase our investment income. So we're going to go ahead and increase our investment income by $2.25. So a credit to investment income and a debit to investment in Little. And again for that amount right there. Okay, just to sort of confirm that we're doing the right thing here, we should be able to add up our various debits and credits to investment income and come up with the investment income on the income statement of 13.9. So let's go ahead and confirm that. So plus 48 minus 9 minus 575 minus 1.6. Not yet. Plus 225 is 3390. Something's wrong. 1390 versus 3390. What's missing? The impairment loss. Again, we created goodwill of 197. At the end of the year, it turns out it's only worth 177. So we've got a $20 impairment loss in 2020. So we're going to go ahead and reduce our investment income by that $20. Just sort of type in 20. And decrease our investment in Little. Okay, so now the sum of our equity method entries does in fact equal our investment income of $13.90 that appears on the trial balance. Okay, now let's go ahead and do our elimination entries. For our elimination entries, I'm going to go ahead and see if I can, how can I do this to make it neater? bear with me here just 1 second. I'm going to try to make this a little bit more, a little bit nicer. I guess I can move one at a time. I apologize. I realize this is not the most efficient use of time for you to watch me do this. Okay, that way I can at least narrow these a little bit. Okay, now let's go ahead and do our equity method entries, sorry, our elimination entries. And again, I'm going to go ahead and put in big, bold, italic elimination entries. And again, what do? First, for our S entry, we eliminate our beginning of year equity accounts. So again, just using my mouse, plus that cell right there, beginning of year retained earnings, plus that cell. And again, now I need to record my various differential assets. And here, in fact, this will be even easier. I'm just going to copy this. It's the same entry, because nothing has been amortized yet. Okay, so there we go. Same entry, because nothing has been amortized yet. Now we're going to go ahead and record our various amortization entries. Okay, A for amortization. Again, we've got 3 finite live differential assets that need to be amortized. We got some goodwill that needs to be impaired, and we got a bond premium that needs to be amortized. So one by one. Inventory, we're going to write that off. So we're going to go ahead and increase cost of goods sold and get rid of the inventory. Property, plant, equipment net, we're going to take some depreciation expense. And again, we've already figured out what that amount is. That's going to be $575. And that's going to reduce our property, plant, equipment net. Excuse me. The in-process R&D, we're going to amortize that. And again, we determined the amortization of the in-process R&D was going to be 1.6. We have that goodwill impairment loss, which we already determined was going to be $20. And then finally, we're going to amortize some of that premium on bonds. And when you amortize a bond premium, you debit the premium on bonds. And again, we determined that was going to be 2.25. And that adjusts our interest expense downward. Okay, so we have S, we have A, I for investment income. Easiest entry of them all, we simply look at this and say, look, there's our investment income. I apologize, back like that. There's our investment income of $13.90. That has to be eliminated. And then finally, D for dividends. We have to eliminate the dividends declared against our investment in little. Okay, so again, here are our elimination entries. As I've said so often, you're probably tired of it. This is the hard part. I'm going to go ahead and shift these down so I can see my entire entry and my entire worksheet at the same time. Okay, so what do we need to do? Basically, debits to the debit column, credits to the credit column. So one by one, debiting common stock, debiting beginning retained earnings, debiting inventory plus that, debiting property, plant, equipment net plus that, in-process R&D plus that, goodwill plus that. On the credit side, premium on bonds plus that. Investment in little plus that. Okay, my I for amortization entries, just going through one by one. Debiting cost of goods sold plus that. Crediting inventory plus that. Debiting depreciation expense plus that. Crediting property, plant, equipment net plus that. Debiting amortization expense plus that. Crediting in-process R&D plus that. Debiting impairment loss plus that. Crediting goodwill plus that. Debiting premium on bonds payable plus that. Crediting interest expense, and there is no interest expense, so I'm just going to go ahead and put that into other expenses plus that. Debiting my investment income plus that. Crediting my investment a little, and again, in my formula bar, right now I've already got plus 060, so I'll go up to my formula bar, put my cursor there, hit the plus sign again, and add that. And then finally, dividends declared, I'm going to debit the investment, so plus that. Credit dividends declared plus that. Now again, in a spreadsheet, there's no reason not to do this. Take a minute, go to auto sum, and sum up this entire column. 640.5, copy it over. 640.5, so my debits equal my credits. If my debits don't equal my credits, there's no way this is going to work. So at least I'm happy here I didn't forget one side or the other of an entry. I might have skipped an entry, I might have put the amount in the wrong row, but at least I've got, for every debit I've got a credit. Okay, now we need to go ahead and add across. For sales, plus, minus debits. I'm including the debit and the credit, even though there's nothing there. I'm including those just for practice. For my expenses, debit plus debit minus credit. And for my expenses, I'm just going to copy that down for all of them. And those all have the same thing, debit plus debit minus credit. Finally, for investment income, it's going to be credit minus debit. When I get to my net income, I work my way down the column. So, sales minus cost of goods sold minus depreciation minus amortization minus other minus impairment loss equals income, which I then transfer down, which I then transfer down to the statement of retained earnings. Now I can go ahead and go through my statement of retained earnings. Credit plus credit minus debit plus credit. Dividends is a debit balance account, so debit plus debit, debit plus debit minus credit. And again, now I work my way down the column again. So beginning retained earnings plus consolidated income minus consolidated dividends gives me my consolidated ending retained earnings, which I then transfer down to the balance sheet as ending retained earnings. Then finally for my assets, again, I've got this nice simple thing, debit plus debit minus credit. I don't have any contra assets, so I'm just going to take this and copy it all the way down. Every one of those cells is debit plus debit minus credit. On the credit side of my balance sheet, credit plus credit minus debit. And again, I'll copy all those down because they've all got the same formula. And again, just to make sure, I'm going to make sure my balance sheet balances by adding up all my debits and then subtracting all my credits. And it comes out to 0, which makes me happy. Okay, for 2021, it's going to be the exact same drill. One thing I noticed a couple people had a little bit of trouble with was this idea of carrying amounts forward. In 2020, we created 197 of goodwill, we got rid of 20, so we had $177 of goodwill on the 2020 balance sheet. That's the amount we're going to start with in 2021. We don't go back to 197. Right now we've got 197. Same thing with the inventory. The inventory's all gone. We created 9, we took away 9. That inventory differential is gone. The property, plant, equipment net, we created 23, took away 575, so we've got about $18, $17 left. So let's go ahead and, again, I'm going to, I want to, there's no sense reinventing the wheel here. I'm going to go ahead and copy this and paste, and that at least they'll have this, the account titles are the same. The entries themselves obviously are going to be different, but the account titles are the same. So 2021 equity method entries. Well, we don't have to buy our investment this year. Income. Sole shareholder, we get 100% of Little's $38 in income. And again, the nice thing is, when I change this, that automatically changes that. Dividends. Little paid dividends of $34, so plus that cell. Now I've got my amortization charges. Now again, this one was the inventory amortization. That one's gone, right? I mean, we don't have the inventory any longer. We still have the property, plant, equipment, and that's being amortized at the rate of $575 per year. Likewise, we still have the in-process R&D. That's being amortized at the rate of $1.60 per year. We still have the bond premium that's being amortized. That's being amortized at the rate of $225 per year. And we have another impairment loss. Now, again, scrolling back up to the top, we see that from 2020 to 2021, goodwill is going to fall again from 170 down to 152, a $25 impairment loss. So we're going to go ahead and take a $25 impairment loss in 2021. We do our elimination entries, and again, think of how things carry forward. Common stock is still $53. Beginning retained earnings is now $290. The inventory is gone. I should clean that up. I'm going to go ahead and delete. So that scoots up a little bit. Okay. The property, plant, equipment net. Think of how we carried this forward. Last year, we created 23, and then we took away, so we subtract 575. So 23 minus 575, N56 minus 066 is 17.25. Same thing with the in-process R&D. In-process R&D, last year we created 8, we took away 1.6. So again, the cell references N57 minus 069. So we've still got 640. The goodwill, last year we created 197, and then we took away 20. And so there's the 177 that we're carrying forward to 2021. The premium on bonds, last year we created 9, we took away 2.25. So the investment in Little should be that plus that plus that plus that plus that minus that, 536.90, and again that was last year's end of year investment in Little balance. Again, last year's end of year investment became 2021's beginning of year investment. Okay, cost of goods sold, again that one's gone. Depreciation expense, just like last time, we're taking another 575 of depreciation. And again, that automatically filled that cell. Amortization, we're taking another $1.60 of amortization. The impairment loss, we determined that's $25 this year. And the premium on bonds, we're going to take another 2.25. Our investment income, again, whatever is on the trial balance as investment income, $7.90. And then finally, eliminating the dividends declared, plus 34. Again, just to just to make sure, let me go ahead and scooch this up a little bit. Just to make sure we're on the right track with the equity method entries. Again, let's confirm that the equity method entry sum for investment income equals the 790 that's being reported on the trial balance. So we have our share of the reported earnings minus the property, plant, equipment amortization minus the customer list, or the in-process R&D amortization, plus the plus the bond premium amortization minus the impairment loss, and that comes out to 790, which is what's shown on the trial balance. So everything is right with the world. Okay, now again, it's simply a matter of copying debits to the debit column, credits to the credit column. I say this until I'm blue in the face. This is the hard part. Once you get this far, once you get these elimination entries, it's all coasting downhill from here. Basically, debits to common stock, debit to beginning retained earnings, debit to property, plant, equipment net. So I put my cursor on that cell, do plus that. In process R&D, put the cursor on that cell, plus that. Goodwill, put the cursor on the cell, plus that. Premium on bond, okay, credit side now. Premium on bonds, put the cursor on the cell, plus that. Investment in little, plus that. Now we do our amortization. Debit to depreciation expense, so cursor on the cell, plus that. Property, plant, equipment net, cursor on the cell, plus that. Amortization expense, plus that. Credit to in-process R&D, plus that. Impairment loss, so plus that. Credit to goodwill, plus that. Premium on bonds, a debit. Interest expense, and again, there is no interest expense, so I'll just put that in other expenses, plus that. Investment income, plus that. Investment in little, plus that. And then finally the dividends, a debit to the investment in little, a credit to dividends declared. Now, I'm going to not cheat, I'm going to make use of the functionality of Excel. The layout of these worksheets are identical for both years. Those are exact same account titles in both years. Now, for the consolidated column, every one of these values I expressed as some combination of this cell, this cell, this cell, and this cell. So what I'm going to do is I'm just going to take that and copy it. And by pasting it to the exact same place here, it automatically, uses the same definitions, saying that this is this cell plus this cell, this is this cell plus this cell plus this cell, and so on down the line. In fact, I'm going to go so far as to copy my check figure down, just to make sure my balance sheet still balances, and it does. So, again, we're after this we're pretty much done with worksheets for now for the next few weeks. It is a critical skill set. This will be a substantial portion. There's going to be worksheet question on the midterm and on the final. It'll be a substantial portion of the grade, and you've got to get the worksheet part down cold. The bulk of the remainder, we're going to be talking about the elimination entries, because we'll focus on the elimination entries. That's the part that requires a lot of thought. I'm going to operate under the assumption that you've got the worksheet aspect down and we don't need to focus on that anymore. Okay, so that was 38-ish minutes or so. Okay, if you have any questions, please feel free to email me. Got to get this stuff down.